But let's now take you through everything that you should track as far as our own markets go. We have Rima as well as Nigel joining us to take us through the trade setup as well as all of the stocks that you should be keeping on your radar in this trading session. Guys, a very good morning to both of you. And Rima, let me come across to you first. We were just going through the global setup, and that's definitely not looking so positive. But take us through everything we should track.
Well, the global equities seem to have lost momentum last week, towards the end of last week. So U.S. markets corrected on Friday. The Dow was down 0.8%, the Nasdaq losing 200 points, 2%. And we saw a similar trade even in the Indian markets, where the Nifty Sensex snapped that 8-day winning streak. There was major selling which came through, especially in the second half of the trading session for our markets, and the Nifty finally ended with a cut of 200 points. So you can get a sense that after this 2 months of a relentless one-way up move without a pause, markets are looking to take a breather, and there could be some amount of profit booking that we will have to deal with. We've also got the August expiry this week. The broad range for the markets is 18,000 on the upside, a level that we could not conquer last week, and on the downside, 17,500 is seen as a support level. The FI inflow in the market continued. So on Friday, the FIs bought 1,100 crore in cash, but the DII selling was more. The DII sold 1,633 crore, so the net institutional figure was a sell. In terms of important macro data as well as events, the RBI MPC minutes were announced on Friday post-market hours, and they signal that more rate hikes are coming, though they will be data-driven. And the global event to watch, the key event, will be the Jackson Hole Symposium, which will be held on Thursday to Saturday.
All right, Rima, thanks a lot for running us through all of those cues. But we're also coming out of the weekend, which means there's lots of stock-specific action that you can fill us in on. So take us through the individual names that we should keep on our radar.
Well, I'm watching Adani Power to begin with, because they will be acquiring DB Power's thermal power plant for a little over 7,000 crore rupees enterprise value. Shilpa Medicare has completed phase 3 human clinical studies of the first biosimilar adalimumab. ICICI Bank annual report was out. Brokerages have analyzed it. Kotak Institutional Equities has raised the target price of 1,025. The FTSE rebalancing was also announced. Well, contrary to expectation, Kotak Mahindra Bank didn't get included. What got included was Bharti's partly paid-up share post those rights issues, Paytm, HAL, Tata Elxsi. On the exclusion side, there were many, but Vodafone Idea, Aurobindo Pharma, SAIL were some of the names. Greenlam Industries has also commenced commercial production of a laminate facility in Gujarat, which can contribute close to 150 crore to their annual revenues at full capacity. So that's another stock you should keep on your radar. Back to you.
All right, Rima, thanks a lot for running us through all of these individual stocks that we should watch out for. We're going to keep all of these on our radar. Finally, let me hand it over to Nigel, who's looking at all of the cues from the futures and options space. Nigel.
Well, morning. There are three broad factors coming from the global cues which are making things a little bit jittery. One is that the US bond yields, they have spiked a little bit. The second factor is that crude oil prices is moving back towards the $96, $97 per barrel, a far cry away from around that $130 per barrel. But still, it's moved up marginally. The problem is the dollar index. That's at the highest we've seen in multiple weeks, and that's moving to around $108. So all those three factors globally, that's a bit of a negative for the Indian markets. In terms of flows, the FIs, they bought, but the DI selling outweighed the FI buying. So two observations out here. One is the FI net buy number. Well, it's close to 20-25% lower than what we have got used to seeing on an average for August. The second factor is we had institutional net buy numbers all along. Now you have an institutional sell number that did come in. That's the FI and the DI together, close to around 500 crores odd. The average for August is a net buy number of around 1,000 crores odd. From the F&O market as well, a couple of observations coming in there. The Nifty had spiked up close to around 1,000 points odd in the August series itself, but the total open interest moved from around 10 lakh to around 15 lakh odd. So it was getting too heavy, in terms of the total open interest on that front. So bracing for a bit of a correction, and that's what happened on Friday. Even the premium, well, it was around 30-40 points odd. That's come down to around a point odd. What did the FIs do in the F&O market? Well, they added more shorts. They added close to around 13,000 short contracts. And after a while, they're net short on the index now. Close to around 52% of their positioning is on the short side. On the option side, well, they're buying both puts as well as calls. But what's making things a little bit jittery is the way they wrote calls in Friday's trading session. Close to around 160,000 contracts were written. And the 18,000 call, 17,900 call, both of them very, very active. So putting all these data points together, what are the levels you're looking at? The range is 17,500 to around 18,000. Let me explain that in further detail. Resistance is at around 18,000 odd. On Friday, we almost went there. Highest open interest as well as at that mark. So that's important. Now, for the August series itself, the average buy price, That's around 17,400 to around 17,500. So that's what makes supports very, very, very important at around 17,500. And if we break that level, then you move to around the 20 DMA, which is up for you on the screen. SGX Nifty is indicating a pullback. Only for the those who have higher risky trades. Well, maybe buying closer to around that 17,600 odd could be a one for the ones that could take that sort of risk. Otherwise, expect some bit of consolidation. Back to you.